Yo, yo. What's going on, boys? So, let's talk about AMC. Down, what were we down today? Like 9%? 9.07% on just about 40 million, close to 41 million shares traded. So, not ideal. Of course it's not. We never like to see AMC down. Our girl Amy, she's down in the dumps. It is what it is. But what really happens next? I know we've talked a lot about patterns repeating. We've talked a lot about technical analysis. But at the end of the day, guys, this is more, and the TA is more of just a way to keep us up, to make sure that we're not panic selling, we're not getting overly cautious about what is going to be happening next. And TA is a way to really predict how things are going to move. But, I have not sold a single share since I have bought back in, it was like January 28th, right after that insane melt up. Yeah, I bought on this day right here, the 28th. I have not sold a single freaking share. I have only actually just about tripled my investment in AMC since that original date. I'm not going anywhere. I'm absolutely not going. I am seeing this play out until the end, and nothing changes for my conviction. Every single day, it grows more, and specifically on days where they want to decide to just dump it 9-10%. I love it. I love it. Now, anyways, guys, we can sit here, we can talk about all the good things, but at the end of the day, listen, we've already won this battle. We know how deep these shorts are in these positions. We know that their hedge funds are not doing good. I mean, we've talked about this for the past month, where hedgies are literally going under. We've seen the catastrophe that happened last year with a certain hedge fund. I don't know why I can't think of their name. Archegos Capital Management, I believe. They collapsed, caused a giant liquidity mess across the board. That's still playing out. We know Kenny G over there at Citadel. They're taking outside investments. I mean, sure, this drop today, no one wanted to see it. But we are going to break down the Wyckoff perspective of why this potentially was a good move. Now, we'll jump... How do I want to view this first? We're going to start with the... We'll call it the... Let's see if I can get everything in the 5-minute chart. No, that's going to be a little too cramped. So we'll go on the 1 hour... I mean, the 30-minute chart here. So this right here is an entire accumulation schematic. Now, why do I think that? Well, let's bring in the Wyckoff. Mr. Wyckoff, the composite man. And we'll kind of keep this off to the side so you guys can still see what exactly I'm looking at. Yeah, you guys should be able to see that sign. So, Wyckoff accumulation schematic number 1. And, of course, you guys know where to find this. It'll be linked in the description below. So, anyways, what do we got going on? And... of course, we have discussed this, but now we have a little bit more data points to actually see what's going on here. So we can even start on the... Oh, come on. My PDF is going to do me like that. So we can even talk first on the micro perspective and then move out to the larger scale perspective as well. But essentially what you have is a smaller accumulation inside this larger accumulation, inside this massive accumulation, and then you can even go one step further and call this entire picture accumulation. But that's a video that we'll be making on the weekend, because that's a long one right there. Now, start with that micro time scale there, guys. So what we got is this playing out. Bam. Here, you got your selling climax. Bam. What happens after that? Automatic reaction to this top of your trend here. Then you get a sell test. You get a push to the top end of that trading range. And then, bam, you dump. Your dump is your sell test in phase B. After your sell test in phase B, well, you start kind of creeping up. And yeah, of course, we do get this. You can call it kind of a bull flag here. Not really the best technical setup, but that's totally fine. So you do get that. Oh, come on. Sorry, guys. Sorry for all the technical issues going on here. But then you do get that push down after the slow climb to the top of your channel. and then you slowly start trading down. And you can see this overall downtrend start, and then today was really that dump into what is called your spring phase. Your spring phase is established because it's lower than your sell test in phase B, like we see here, and lower than your selling climax, which is just about at this range right here, if you don't count that wick right there. So everyone wants to know, is the selling over? We going back to the teens? What's going on here, Dave? Well, to be quite honest with you, this spring it can play out multiple different ways. You can have that spring, or you can have what's called a terminal shakeout. The terminal shakeout is just a deeper iteration of what this spring is, because the spring does, break down into your lower trading range and below that lower trading range, but your terminal shakeout here, guys, pushes a lot deeper, but what it causes is a massive reaction. Because think of it as a spring. We've talked about this in the past, where you compress that spring so much, it just wants to jump up, because that's the way physics works. I'm not a physics guy. We're not going to go into it. Don't you worry. But that's how it can go. Now, yeah, sure. We do have this support here, and enough with Wyckoff over here. This support here at $20 and call it just 50 cents. Make things easier. Where's that? Well, that's at the top of our January 27th, 2021. That's the top right there. So I would love to see us hold support at this area, around this area, and then potentially start to see some momentum shift in tomorrow towards max pain. That would make a lot of sense for me, but we absolutely can continue this downward trend that we have been in. If we do look at volume did increase from yesterday, and I mean, just this whole week was flat for the most part, but all in all, you are kind of topping out on the volume bar and starting the overall lower decline for the past couple of days. So that's also a really good sign. And also just from this micro Wyckoff perspective, I mean, yeah, we can absolutely start pushing down lower, even break this channel here, come down to fill that gap in this area before really kind of reversing on that smaller time frame. I don't see that happening, guys. I don't really see us going into the teens. I mean, we did have 2 stops at this $20 mark. I mean, look at that. But what I do want to say is we did close under that $20.80 mark. That didn't happen this time, and that's where we had a giant increase of volume over here. Didn't happen over here. We did kind of get that automatic reaction up, and we didn't get it today. So things may have changed, and we could absolutely see the teens play out. Now, of course, in yesterday's video, we did discuss this similar pattern, fractal, whatever you want to call it, playing out, which is this drop right here before a pretty decent spike back up. The same thing happened over here. Now, where I was kind of saying we were was in this area, kind of the last portion before that spike up. And as we know, guys, and as we discussed yesterday, patterns look pretty, of course they do, but a lot of these algorithms or fractals or patterns can be sped up or slowed down within the overall cycle itself. So that's what we're getting. It is what it is. Now, it doesn't change my thesis about what's happening with AMC. Obviously, we know it's heavy manipulated and heavily shorted to literally oblivion, so it doesn't change anything. They want to drop it to 17, cool. I get paid tomorrow, so I'll take it. But if they don't, hey, you know what? We could get that reversal tomorrow. So it's all up in the air, guys. It really depends if the Bulls are going to step in and really start pushing this up. And if specifically they have met the composite man has met their supply and demand metrics to really start moving the stock price up and start their buying. Because they are hunting for shares right now. They're trying to accumulate as many shares as possible. Now, of course, we did discuss the micro-term picture here on that, I guess you could say 5-minute chart. Now looking at, we'll jump to the hour here. We'll zoom in quite a bit. So similar thing playing on here. Now, why is it not distribution? Well, I know a lot of people, or a couple people at least, have been saying that this could potentially be a distribution schematic, and then we could push down to the teens. Well, I'll show you guys what a distribution or your distribution schematic would look like, and it's this right here. So this is number 1, and this is number 2. And bam, So what happens is, well, typically a distribution happens after a climb up. Perfect example of that, look at AMC over here. You get that massive push up, and you really just get these crownings at a kind of average resistance area, and you just get bounced around, and then you distribute to the downside. What we have playing on over here does not look like a distribution to me, if I'm being honest. And I'm just showing you all what I share, what I see with my own two eyes. But let's bring that schematic back up and give you a quick look at this. So, no, I do not think this is distributive at all. We'll jump over. Because of the reason we didn't really get this LPSY, which is just your lower point of support in the chart, and just showing signs of weakness overall because it can't push higher. We did get a brief touch and then a decline. You're also not getting this up thrust momentum. You are getting, a move up, but that is similar with the accumulation schematic as well that we are going to talk about. All right, and what do we got here, guys? So we'll talk about accumulation schematic number 1. Number uno. Anyways, you get your selling climax, boom, automatic reaction, bang. Then this right here is your sell test in phase B. But you do find that support at that 2080 area, and you start that push up to the higher end of your trading range, which is established by the stoppage and selling pressure, which does to me seem like it's this area over here. That would be where I would at least put the PSY, which is over here, the PS, right over here, which lines up literally perfectly. Then you get your selling climax, automatic reaction, sell test in phase B, all the way down here, trend to the topper end of your trading range, zigzag puzzle down, and then move into you can call this an LPS phase. Number 2 is more of this bouncing in the middle of your channel, so that's why we're not looking there. But what I think is playing out right now is you kind of got this zigzag puzzle here, which is the lower end and the end of phase B. And now what we're getting is this spring action on the 1 hour chart. So meaning the reason behind this is yes, it can absolutely go lower. Maybe a dip into this $19 territory, possibly tomorrow. I mean, hey, let's get the selling over with at this point before we start to kind of move out, get our test phases, move up into phase D after that, and then we're off. And then that's a really good start to get back up into this $30 range where AMC really needs to start moving towards. I mean, the fact that we've just been beaten up for so long. I mean, look at this RSI. For the past, I don't even know how long. It feels like forever at this point. But we've been under that 50 mark for quite some time. And have only made just one attempt at going towards 70. And that was when we got rejected at that 31.15, which is the lower end of our trading range per the larger scale 1-day schematic. So it's totally fine, guys. This is totally natural. And honestly, getting that spring action is a very good thing. Now we're back in this oversold territory. It's not going to last for too much longer. We do have that MACD crossover, which is why I am kind of leaning towards we may see the $19, $18, $17 range. But here's the thing. That is essentially your spring / terminal shakeout. And the terminal shakeout is just a different iteration of a spring, which is a deeper correction to the downside. But when you do have that terminal shakeout, it is a extremely, extremely bullish thing. And let's see if I can get this right here. Yeah. So usually springs or shakeouts usually occur late within a trading range and allow the stock's dominant players to make a defined test of available supply or shares before a markup campaign unfolds. A spring takes price below the low of your trading range and then reverses to the close within the trading range. This action allows large interests to mislead the public, mislead possibly other institutions that are playing to the downside, i.e. trapping short positions, mislead the public about future trend direction to acquire additional shares at a bargain prices because they're selling, you're trapping the bears, doesn't look good. Because then, when the price starts to dramatically increase, you have those puts being sold. You have potentially smaller firms covering their short positions, which then helps the case to the upside. And that's essentially what's playing out. So it's a good thing, guys. I know it doesn't look pretty, but it is a good thing. On the other hand, a terminal shakeout at the end of accumulation trading range is like a spring on steroids. Shakeouts may also occur once a price advance has started, with rapid downward movement intended to induce retail traders and investors in long positions to sell their shares, sell their shares to large operators. However, springs and terminal shakeouts are not required. Of course, you can see that in schematic too. So, nonetheless, guys, there you go. Springs and terminal shakeouts are a thing. It is a bullish thing to see this, and to see what we saw today, a dramatic drop in price. Especially when we had that overall trend right at that kind of max pain level, right below 24 and right above just like 22.50. We're in that very tight gap. So this was definitely a change. More volume, not too much volume though, which is absolutely why I do believe we are now in the spring phase on this smaller scale time frame, which is totally fine to see. It's a good thing to see. Now, it's far from over, guys. It's so far from over. Now, the biggest thing that I do want to kind of jump into real quick is the options chain, because we can tell a lot of how AMC is going to trend in the shorter term with these options using unusual whales. Also, shout out to Unusual Whales. You guys are doing such an amazing thing with really showing how Congress and, all of the people who get all this inside information are neglecting it, taking advantage of it, and making boatloads of money. I mean, I saw it on Joe Rogan's podcast. That was huge. I've seen it on other news channels. Everyone's talking about this stuff, so I know you guys probably don't watch my videos, but shout out to all of you and the whole team. Now, anyways, this is all of the options flow, and I do have a premium range set to 50,000. Days till expiration is greater than 1, just because I don't really give a shit about daily calls, puts on AMC. It's not really going to move my needle for me. So, obviously, what do we see? We saw a lot of bearish activity, but a lot of the activity is more for the short-dated contracts. Specifically, what was being targeted today was that 1/21/2022 expiration. Now, as we know, there is a boatload of premiums on the call side and put side and open interest, I'll add, for that 1/21/2022 expiration. Now, a lot of people were saying it could potentially lead to a gamma squeeze, which it could. Gamma squeeze doesn't naturally happen because you go crazy with out the money call options that cause a gamma squeeze. Now that could, but it can also happen with at the money or just a lot of puts being sold, increasing gamma. But we can get into kind of mechanics of Greeks and options all in all on another video. Now, nonetheless, sorry for that rant. The bearish activity around this 1/21/2022 expiration doesn't look pretty, because a lot of retail traders in the community were trying to almost force a gamma squeeze by going with these 1/21/22 expirations because of the large open interest. Now, the only thing I'm seeing is it could be a trap. They could really drive this price down to collect a boatload of premiums from the call side. The only reason I'm saying that is because a lot of puts came in today. Now, the biggest thing that I do want to say is the premiums being spent weren't crazy, and we can actually increase this range to, let's say, like 100,000. Kind of look at it differently, because we were doing 50K before, if you remember. So, still nothing crazy. I mean, look at this. You had a lot of puts in the morning time. Or sorry, this was actually later in the day. $30 puts being sold. That's good to see. You did have this $40 put purchase for the 1/21/22. This one's a little bit more out, but still selling the put. So if we do filter out the smaller term contracts or smaller term premiums, it's kind of mixed on how the flow was. Actually not terrible when you look at it from a larger scale perspective here. Nonetheless, guys, shit. Today sucked. It sucked. No one wants to see AMC down. But at the end of the day, we know what the ultimate outcome is going to look like. Now, it doesn't change, and just go on YouTube, go on Twitter. No one's freaking leaving, guys. This movement isn't going away. And they can't just sweep this under the rug. That's not an option for them because it is a filthy, filthy mess that they have created with these synthetics and shorting of the ETFs. I mean, look at the FTDs for the IMW. Or IWM, sorry. I'm dyslexic. Some crazy stuff going on, guys. It's not going to just magically go away and AMC is going to go to a penny. Like, I'm sorry. Rich Greenfield or whatever your frickin' name is, you're the worst analyst of frickin' history at this point. There's people on Twitter who are way better analysts than you will ever be with no education. But yeah, it is what it is, guys. I do see a little bit more downside coming, but I would also like to see some type of correction going into Friday, coming back up towards the max pain. So, that's what it is. We'll see how everything plays out tomorrow, but guys, stay strong out there. Don't let this get to you mentally because it really is a psychological game. And whoever has the strongest mental mindset through this is going to come out on top. And guess what? Retail isn't leaving. Citadel, it's not their money. It's not their money. It's their clients' money. They're going to start asking questions. Don't you worry. All right, guys. Peace out. Hope you enjoy the day. Be back tomorrow. Hopefully for a little bit better day.